episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you. Hey guys, before we jump into the episode, I wanted to let you know it is brought to you by Revinova, the official TMS provider for the Freight Coach. You guys, I've been a broker for a long time, and the tools that are at your disposal with Revinova help you eliminate bouncing between systems, which improves your accuracy when you are managing multiple tasks throughout your workday. Plus, it's built into the Salesforce cloud, so your CRM is fully integrated with your TMS, eliminating yet another silo. In today's day and age, you are definitely concerned about the safety of your data. With Revinova, it's fully protected. They have cutting-edge security that keeps your information safe so you can focus on what matters most, and that's growing your business. Speaking of growing your business, with Rate and Lane IQ, you get real-time pricing and route recommendations, helping you optimize costs and improve operational efficiencies, which ultimately helps you make smarter decisions. If you are like me and have recurring shipments from non-EDI customers, they have intuitive cloning features that let you easily replicate previous shipments, saving both shipper and carrier rates with just a few taps. If you are ready to learn more, visit www.revinova.com to request a demo. Just do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. And most importantly, you guys provide some actual insight into what you can do with all of this information. This is your first time tuning in. Welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Tuesday, everybody. I got some industry headlines we're going to be breaking down here shortly. I do have a market report. We're doing our reefer freight lane analysis today, powered by my friends over at DAT. We're going to jump into that. I got some overall market insights to share with you guys as well. And then we're going to break down some articles, my favorite part. And I'm going to try and not get super annoyed on some of the topics that we're talking about today, but we're going to do it. One quick reminder, you guys, my weekly newsletter, the Freight Coach newsletter, drops every single Wednesday, once a week. I need you to go to thefreightcoach.com, though, to register for that. And I do that because I want you to want to receive it. I don't want to bombard your inbox and just auto sign people up with stuff. So if you want to get in on it, it drops once a week. Freightcoach.com, it'll auto register. And we'll do that. Again, it's just all market related, fuel prices, all of that stuff, because I'm not a life coach, you guys. I'm trying to figure my own shit out. And I'm here to talk about freight, which I'm also still trying to figure that out as well. So let's get right into it. And again, I strategically chose this lane for This Week in Freight, powered by my friends over at DAT, due to the absolute weather catastrophe that happened in the Northeast, and what that will do to freight lanes coming up here, and why you guys need to pay attention to a lot of this stuff so you can see those spikes and have that direct line item that you can pull when you're looking at how are you bidding out lanes. Okay, so this one we are doing is going to be reefer freight, Charlotte, North Carolina to Newark, New Jersey. All right, and then once again, I want you guys to pay attention to the year-long trend line. Okay. And with the storm going on in the Northeast right now, you are going to see a natural spike that comes along with it. But as we always talk about, you guys, I want to help you guys see the similarities that are going on in every lane, no matter what's going on in the market. They generally follow the exact same pattern. Okay. And then again, note the miles, most importantly. And then number two, with reefer freight, obviously there's three different classifications if you're going out there and pricing this stuff. Is your customer frozen? Are they fresh? Or is it temperature controlled? There's a lot of temperature controlled freight that heads out over the winter time and everything else. So that does affect dry van capacity at the exact same time. And that will pull that market along with it. But let's go down to this. All right. And then again, we're kind of following the produce trend line here, you guys. So you can see that currently year to date, if we're looking at January 2025 and January 2026, it's essentially the exact same price, right? $80 more, $70 more. But what I want you to pay attention to here is this going to follow the exact same trend line in February and March? Now, I would expect an increase compared to last year overall, just due to the fact that there has been some well-documented capacity exits out there. There's been some well-documented weather events that have happened out there as well. So you're going to see that elevation in the price. And I truly think it's going to reflect it. It's not going to be as dramatic as some out there are going to want you to believe. But again, follow that trend line. See, this is that pre-seasonal spike. I mean, it's late February right now. A lot of us are out there and we're prospecting shippers, trying to get onboarded, trying to do anything to stand out in that crowd, knowing that there is going to be an increase in pricing coming up here in the next 90 days. That's going to help you guys price this freight for the long term. And again, those factors as we're going in there for this freight in particular, mileage, what style of reefer freight is it? Obviously, a frozen load is going to probably cost you a little bit more than a fresh load or a temperature controlled load. So as we're going out there, though, you guys pay attention to this and then look at that drop, okay? Between July and August, look at that drop. Pay attention to that. That's probably going to reappear this year because my standpoint is, yes, there is going to be there's going to be some natural shifts that are going to happen, all right? There's too much stuff going on, you guys, from the overall capacity marker that's going on and what the DOT is doing. I still think it's too early to see how much capacity is flushed out of it. But I look at it is this is how a market is going to perform. And I think this year more than ever is going to show very dialed in seasonalities that maybe haven't been present for the last couple of years. I just am at the point, though, where there's still a lot of trucks on the road. I would say like this, from my perspective, that's going on out there, you guys. When last year there might have been 5 trucks to one load. I just think we're down to like 3 trucks to one load. And I think most people, when they're going out there and they're pricing their freight, they think that they just got to quote less than everybody else, and then they drive down rates and everything else. And that's their entire business strategy that goes on out there. But at the end of the day, you guys, you can be in a very good position with your customers by, you can charge a little bit more money, but your service has to back that up. But if we're looking at this lane, again, we talk about power lanes. This is the epitome of a power lane. This is going to be, in the event this market changes this year, this will be like the last one to change. Just like when we dropped yesterday, Indianapolis to Philadelphia for the dry van. Same thing, you guys. These power lanes are the literal last ones to change. So even if there is a market shift that might be substantial this year, this will be the last one to go. All right. So pay attention to this one. And again, if you're out there and you're bidding on this lane, again, we want consistency. So with that mileage, if this is a Friday to Monday run, you want to take that into consideration. Unless there's a ton of volume that comes along with this shipper, then you just eat that one, right? Because I'm all about servicing my accounts for the long term. But this lane in particular, I think it's a very stable lane. I don't think this one's going to change much this year at all. But those are those points of emphasis. If I was going out there and bidding on this one specifically for my customer here, I'm going to, again, with this being a reefer lane, you guys, and then it's Charlotte to Newark, all right? With this being a reefer lane, if it's a frozen load, that is needing to be priced differently than a fresh or a temperature controlled, all right? So those are the 3 considerations as you're going in. And then the mileage as well here, all right? Days of the week. I want you to pay attention to that. If this ships on a Thursday to a Monday or a Friday to Monday, that is going to be exponentially more expensive than a Monday to Wednesday or Monday to Thursday ship date out there. So take that into consideration, you guys. If you want your lanes broken down, again, I don't need exacts. I just need ballpark shipping city, ballpark delivery city, freight type. I will break it down on the show, but I need you guys to email my team, podcast@thefreightcoach.com. This is literally how I analyze the lanes that I go and, actually move real freight with, you guys, because I own an actual freight brokerage and we move, real trucks and everything and all that fun stuff. So email podcast@thefreightcoach.com. That is the reefer freight lane analysis for This Week in Freight, powered by my friends over at DAT. Now, let's see some other fun stuff here, because I got some overall market insights for you guys as well. But let's go into this one here. So if we're looking at it overall, you guys, spot rates did drop again overall on the national level. Spot truckloads rates eased again during this past week. Dry vans dropped 3 cents to $2.40 a mile. Refrigerated is down 7 cents. They're at $2.83 a mile. Again, this is nationwide. And then flatbed is up 3 cents to $2.63 a mile. The total number of loads posted on DAT declined for a second straight week, falling 8%. Truck post decreased as well, 4% out there. There were fewer van loads that were out there. It dropped 11% week over week. Van equipment was down 3%. Reefer freight was down 18% week over week. And then reefer equipment was also down 6% overall. Flatbeds are pretty much the same out there. I'm very excited about flatbeds because that's what I move. But I think we are looking at a pretty standard seasonal push on a lot of this stuff, you guys. And again, I could be wrong, but I also look at it as there's a little bit more stability than some are trying to get out and proclaim out there. But that's always going to happen, you guys. Everybody's got a job to do. Everybody's got a product to sell and everything else. And most people align with headlines compared to what their product does and how they sell it. But I look at it is a lot of what I'm seeing right now, you guys. There's been some pretty substantial weather events that have happened this year, kind of across the country within the last 30 days. And I think that is always going to naturally do it, right? Like if we're looking at the storm that hit the Northeast yesterday and Sunday, that is going to have a ripple effect across the country, you guys, for the next couple of weeks. All right. When there is delays, it starts to roll and it starts to snowball and everything else out there. But pay attention to those things, you guys. There's a lot of opportunity no matter what. John Cantera, what's up, man? He says, we know capacity is going down, but will capacity shift to the non-CDL market? Do you think the non-CDL will mirror the CDL market in terms of rate increases? John, I personally think that, yes, I think that that's where it's naturally people are going to try and take advantage of that one. But I really, really hope the DOT starts to absolutely hammer that as well, that market in regards to like box trucks and hot shots and sprinter vans and everything else. Because again, I just want a level playing field across the board and people shouldn't be able to like shift around and swap that around, right? Like I think standards are a very good thing, but I think that yes, you will naturally start to see people are going to go out there and they're going to try and explore other modes. And if box trucks start to see an increase in volume, I think that those guys are going to go out there and naturally increase their prices across the board. But let's break down some articles here, you guys. I am a fan of articles and giving you guys my unfiltered opinion about what is going on. First article we are going to break down, you guys, ttnews.com. Trump says he'll raise tariffs to 15% after court rebuff. Again, you guys, all the links to the articles that we break down are going to be out in the show notes. I really want you guys to read these on your own. Again, this is just my opinion on this stuff. President Trump has proposed a 15% across the board tariff on all imported goods, a move aimed at further decoupling from foreign manufacturing and incentivizing domestic production. While the long-term goal is a revitalized U.S. industrial base, the short-term impact on the freight market is a massive bullwhip effect, potentially. Shippers are already scrambling to front-load inventory to avoid the 15% margin hit, leading to an unseasonable spike in port and inland volume and a rapid acceleration of nearshoring in Mexico. I personally think that has everything to do with what was in place before this. Like, let's be honest, you can't ship shit from China to the U.S. in 72 hours because this just happened on Friday. So again, take that into consideration. I think that what you're going to see though, is I think that, you know, I think it's very, very important to notate. And I'm not a tariff expert at all, right? But I am a fan of the reindustrialization of the United States of America. What I did not agree with and do not agree with is the flip-flopping that has went along with this, right? I'm a firm believer that if you're going to charge 15%, stay at 15% and be done with it. I don't understand why there's so much pushback against tariffs when we're charged tariffs to export stuff, right? Like, why should we not have reciprocal tariffs on goods? And that's one thing that I think is kind of missed on a lot of people. And I literally just did a load up to Canada. You guys, guess what was on that? A tariff. Shocking, right? So if Canada can charge us tariffs, why can't we charge Canada tariffs? That's kind of the way that I look at this. And it's like, why are we always getting the short end of the stick on stuff, right? I think that with where I'm at, if tariffs are going to be here, which they're going to, President Trump has made it very evident that this is going to be a very big thing. And for all the people out there who are like, oh, we're paying for it, we always pay for it as the consumer, you guys. I hate to break it to you, but anytime the cost of goods or raw materials increase and the cost to produce said goods goes up, what do you think these companies do, you guys? Do you think that they're just like, you know what, this time we're not going to do a pricing? This has been happening forever. So it's like, to blame just this administration for this is so categorically false. Again, you can not like the messenger all you want, but like, why can't we just call balls and strikes? It's not just this current administration's fault for why the cost of goods are up. All right. Like, is there a contributing factor to this? Yes, this is going to be a contributing factor, but this has been happening forever. All right. Forever. Cost of goods go up, manufacturers increase the price, transportation, everything goes up, and the end consumer always pays for it. To sit here and blame that, I think it's such a baseless argument. But again, I think, what could this possibly do though? I personally think if there's a flat tariff across the board, I think that this could probably stabilize it, right? And I think that maybe the current administration is going to have to look at that and be like, all right, why don't we stop flip-flopping? Let's bring some stability out there. And then that could maybe, even it out a little bit. But I look at it as, the reindustrial. This is how I honestly see this. And this is going to take a while to figure out. I think my standpoint is the overall goal of reindustrializing the United States of America is phenomenal, and it should happen. We should have zero foreign dependence on anybody for anything. All right. When we are the world economic leader that is out there, we should act as such, right? And I think the end goal is a very, very good thing for the United States in the long term. It's just going to be messy to get there. All right. It's going to be messy to get there. And I think everything that comes down with this is going to kind of back that up in the short term. But I look at it is this going to have a massive effect on freight overall? I don't think so. I don't think it has, entirely. I think that people are not buying stuff at the levels that they once were. I mean, I pay, like, if you're going to look at a lot of this, I look at it like, look at consumer credit card debt. That is a very clear barometer on if people are going to be spending money or not. But I think that overall, you need to be taking all of this stuff into consideration as you're going out there and bidding on freight. I look at it as where is the opportunity going to land? All right. So what if there is a front loading of product, right? Then there's going to be some backups at the ports potentially. And if you're a drayage person, that's going to bode well for you. Or if you operate in the inland empire out in SoCal or Savannah and stuff like that, there could be some backups of some freight that could potentially happen. So I look at this as a little bit of chaos can cause a lot of good in the freight market if you're out there trying to find new opportunities. All right. That's kind of the way that I'm trying to approach a lot of this stuff, you guys, because I think that no matter what, everyone's an expert out there, right? Like, clearly everybody's a cartel expert down in Mexico now. Everybody's a tariff expert. Everybody's a non-domiciled CD. Everybody's just a fucking expert on everything out there. I look at it as again, I always focus on the fundamentals of my business because I cannot control what happens. All right. I cannot control what goes on out there. I can only control what happens inside of my four walls. And I really think a lot of people need to be taking that in consideration. Is it kind of reckless at times, the flip-flopping on tariffs and the amounts? Yes, it is. All right. I've stated that numerous times out there. But as an opportunities perspective on what could happen to your book of business, I think throwing a wrench into some things can open up some opportunities. All right. And that's kind of all I'm going to say on this one. Again, the reindustrialization of the United States of America, building a stronger economy and a stronger United States manufacturing sector, I think is a very good thing for our country overall in the long term. But if you guys want to read that, ttnews.com, Trump says he'll raise tariffs to 15% after court rebuff. Now, let's go to the next article. We are going to break down from the JOC.com, trucking executives buoyed by freight market signals as winter exits near. According to the JOC, top trucking executives are reporting the strongest market signals since the recession began in late 2023. As we exit the winter of 2026, the data shows capacity attrition has finally caught up with demand. Key metrics, including narrowing contract to spot spreads and a steady rise in tender rejections, indicate that the cycle is flipping. Executives are signaling that the floor is set and the industry is moving into a period of stabilization and potential rate recovery. I look that, again, tender rejections increasing overall is a good thing. All right. I think that anytime people start rejecting freight, if you're out there and you're trying to get in the door with somebody, that's a good thing for your opportunities, right? But I also look at it like overall, where I don't know if 2026 is going to be the paper recovery year that a lot of people are hoping for, because I think a lot of shippers, again, I hope I'm wrong, because your boy actually makes cold calls, and my brokerage would flourish if this actually happens. We're already flourishing, but you guys know what I mean. The more capacity exits and the tender, like the more chaos that's created, the more people are going to be willing to listen to new providers. So I think like that is a good thing, but I also don't know of any shipper that doesn't have multiple service providers that could take on any potential volume increases in the event anybody falls out. So again, it's a good indicator, but I don't know if it's the thing that people want. Again, hate me all you want for saying that. It's just my perspective on things. I look at it that if you're still around right now, you're going to dominate coming up here, right? Like I personally think that we're probably 2 years away from the overall fallout of all of the push of the DOT right now to remove a lot of this stuff and clean up their operations. I'm very, very optimistic on what that will do to the legitimate providers that are out there. I think that this is going to usher in a golden age in this industry that is going to make COVID look tiny. I truly do, because if there is a lot, like, I just think it's going to end up very well for us overall. I look at that. There's a lot of potential capacity constraints that could happen from this coming up here. I don't think we're there yet, but again, I would say that come April, come like mega produce and building season and everything else kicking off, I think that's going to be the clearest indicator. I think right now is too early to kind of point the finger in any direction. But I look at it is there's a lot of capacity that's still on the road, and there's a lot of providers that are set up with a lot of shippers that could take on any potential volume that could fall into their lap in the event that people shake up their current market. But again, don't ever stop calling. Don't ever stop positioning yourself as a viable option in the event their needs change. I'm going to break down, if you guys watch the show on Thursday, I'm going to lay out step by step how I built my business up to what it is today. And that's an annual 7-figure brokerage. All right. Annual 7-figure brokerage. And I just laid it all out there on how we did it. And I'm going to continue to do that stuff as we grow, you guys, because again, as much as I pay attention to what a lot of the headlines are, but I don't let any of this stuff affect my decisions, because like I got to build, and that's always going to be my thing. If the market shifts, like great. If there's more opportunities that fall my way, great. But like, again, we got to control our controllables inside of our four walls. I I look at it as this is a really good opportunity for you to go in and offer consistent pricing, even if you don't have RFP style shippers. I think bringing stability to their market right now and then honoring that, because I think that one giant miss from a lot of people is the fact that this next swing that is probably going to happen is not going to benefit freight brokers like at all. I do not see a time when shippers are going to willingly increase their rates overall. And I think brokers are going to have to, I think brokers are going to see compressed margins coming up here. I truly do. Again, I hope I'm wrong, but like I've been through multiple market shifts before, and this is how they've kind of all performed. And I think brokers are going to have a very tough time in these next 24 months if capacity tightens up at the levels that some people are predicting. And if you've never valued a carrier in your entire career, I think you're going to have a challenging time. But that article, joc.com, again, trucking executives are buoyed by market signals as winter exits near. I always pay attention to what the larger providers are talking about, you guys, because they have a lot of data, a lot of insights, and it's always good to pay attention to that. But again, I do not let it change my strategy and what I'm doing inside of my business. Third and final article is from FreightWaves. My favorite group, the union, back at it. Court says small trucking company must negotiate with union defeated in a vote. In a landmark legal move, a court has applied the NLRB CEMEX framework to a small trucking company, forcing them to negotiate with a union despite the employees voting against unionization. The court ruled that the company's unfair labor practices during the campaign period invalidated the election results. This sets a massive precedent. The secret ballot is no longer a guaranteed shield. If a company mishandles its response to a union drive, the government can now simply install the union by an administrative order. That doesn't sound very democratic or capitalistic, or kind of sounds, I don't know, like I always think unions are. Fucking glorified communism. I look at it, you're like, I try and like, I despise unions at the end of the day. I despise the fact that they can go in to a private business and then force them to unionize. Like, how is that even a thing? Like, I want somebody to explain to me. And again, every time I speak out against the union, I get bombarded with pro-union people. I get it, you guys. I get it. But my challenge to the union is simple. If your business strategy is so good, why don't you compete in the open market? Why are you going in to try and take over companies? Like, because that's what this is. Again, I'm not a lawyer, but I look at this as this is a union trying to go in and take over a company. Look at what happened to UPS. All right. I'm not saying that people should underpay and not pay their employees and not take care of their employees. It's not what I'm saying at all. But what you're seeing here is a track record of, specifically inside of transportation, that the union can go in and forcefully take over a company. That's what I'm reading from here right now. And I don't see how this works. I don't see how this carrier is going to survive. Like, this is a small business. I look at it that, what this is going to do. Like, most businesses are operating on razor thin margins as is. And then if you're going in there and you're operating and you're adding expenses now, like if this company, say everything goes down and this company's forced to unionize, and then all of their cost of services, they're going to be bankrupt, you guys, unfortunately. Like, and I think that, like, there's just been a track record here, you guys. And this has been on the past 4 years since I've been doing this live show and breaking down industry articles. Yellow, massive union presence, went bankrupt. UPS, massive union thing. laying off a shitload of drivers now. And I think that you're going to start to see this. Again, I just look at it as if you are the labor union, why don't you just go out and start your own business and compete? Build $1 billion business and compete in the open market. Like, I think that's the best part about the free market. I think like anybody can go out there and build a business to compete. When this stuff happens, the court, in my opinion, weaponized this and is going to forcefully institute a union. And I would say, pay attention to this, you guys. Unfortunately, this company is probably going to have some rough seas in front of them. It's Garton Trucking out of Southwest Virginia. They have 17 trucks, you guys. I don't see how this ends well for them at all. I think that this is going to be I think this is just a loss. This is a loss for the free market. I think that the union is going to do what the union does. And again, I just think that the union, if you the Teamsters, if your business strategy works so well, go start your own trucking company, buy all your own trucks, all the technology, and go compete. Go compete on the open market. All right. And then see how well that is. Because like, I think it would be way more profitable for you guys in the long run if your business strategy works so well. If this works so well, go out there and compete in the open market and then show everybody why your way of doing it is better. And I just don't understand why you don't do that. I truly don't. But I get it. All the people who are pro-union are going to talk about how I'm everything under the sun. Go right ahead. Does not faze me. But I just think that this is a massive loss. And this I hope I'm wrong, but this is probably a death sentence to this carrier out there. And in my opinion, they weaponize the courts against them. But anyways, you guys, that article is from FreightWaves. You guys know what to do. Go to the show notes if you guys want to break down and read the articles on your own. But that is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. And if you're feeling ambitious, rank this show on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys. And we'll be talking to you soon. Came back.